Happy Monday, traders. It is Monday, the 11th of January, 2021. It's 8:01 a.m. here in Chicago, and what is a very gray, cold winter day in the middle of January. The first week of trading is behind us. Welcome back. This is episode number 1914. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick hop into our convergenttrading.com's pre-market summary sheet. Risk off sentiment this morning. We finished really strong at the end of the week last week. If you recall, Friday was non-farm payroll unemployment day. Market ended up selling off a little bit and then rallying into the close in what was a neutral to neutral extreme up day. Since then, after the futures opened last night here in Chicago, Sunday night, it's been selling off, has stayed in balance for a while, and we're below 3,800 now and starting and continuing to push down. Would not call it a trend day yet across the board. Looking at the Russell, the Dow, and so on, I wouldn't call it a trend day yet, but we're still in range. But overall, risk off and allocation is coming out of the equity indices, as you see in front of you, the orange being pulled. But if you look at where the money is going, really, there's no clear indication. A little bit of metals, allocation to metals. We would expect the bonds and the 10-year notes and the Bund to be higher today, and they're not. So overall, a risk off to a slightly neutral stance, really. As far as what's driving us, looking at the Thomson Reuters morning report tells us that the coronavirus cases surpassed 90 million as the world battles with this new variant. Also, the Democrats are kicking off impeachment proceedings against President Donald Trump, given what happened last week. The raid of a riot, or whatever you want to call it, depending on which side you're on, the breach into the U.S. Capitol. Twitter shares are off this morning because of the permanent suspension of, I don't know why they call it permanent suspension, because if it's permanent, it's not a suspension, but permanent suspension of President Donald Trump and a bunch of other political figures. And then we're also concerned, there's also a look into the market ahead into the financial services earnings coming out starting this Friday. The expectation is that profits have plunged 40% from a year earlier before the pandemic started. So we're looking for JP Morgan and many others to start reporting at the end of the week. We'll see how that plays out. And so that's where it stands. So that's it. We're looking at, in the overnight session, we're at 217,000. The sheet in front of me says 205 because it has to be published, and it's published at about 7:50 Central, 8:50 Eastern. About 15 minutes ago, we've traded about 12,000 contracts since, well within what we would consider to be normal. The inventory is 100% short, 100% short coming into today. With a range of 37.5 points, which is okay. And then the overall market condition is balanced. We remain inside of Friday's range and price discovery. So overall, we're looking at balance, even though we're off. We're lower than the close on Friday, which is expressed in terms of the inventory. One thing, again, I want to remind everyone is to pay attention to these rotations as they get adjusted. The harmonic rotations inform us as to what the volatility looks like on a 1-minute bar basis. These are swing high, low, 21.5 for the NASDAQ and 5.5 for the S&P. Volatility had increased slightly last week, giving us a wider range to deal with in terms of stops and targets. These numbers here are important, okay? So I'm going to jump right into the review. On Friday, I didn't do any scenarios. It just did not, it was kind of a toss up, and there was no sense in me fabricating scenarios. So Friday was all about seeing how the market trades at the beginning and which direction it flows into, and then to trade from that direction, which in most cases is pretty decent. But you can see here we opened out of range of Thursday. We have an open auction out of range. We put in an opening swing at 38.15 quarter. This is the first selling spree. And then the opening swing low, which is the first buying spree, is 38.06 and a quarter. And we basically breached it upward, downward, back to the middle. So we immediately know that this is an open auction, and to be cautious trading in the middle, that there's likely to be a lower probability that we would get paid if we trade from the middle. In the middle of the range. It's a type of day where we would look for extremes. In fact, let me turn off these stock zones because they're for today, not for Friday. And that's what we had. We had a push down into the range. So we push. This is the high of the prior day. This green line, the pink line or fuchsia or whatever it is the point of control of the prior day. I talked about how there's high kurtosis on Friday, and very often high kurtosis means a lot of participation. It's likely to act as support or resistance if it's above, and so we push into Friday's range and we go right into the prior point of control, and then immediately bounced right off. So again, knowing what we know about how it opened, we're looking to trade from the extremes out. Every time it pushes an extreme, we're looking for a trade back in. This one is special here since it was actually an impulse, so we would expect impulse pullback against the IB. Continuation, which you had to be pretty aggressive about your entry on this. Overall, Friday was not an easy day. It was not an easy day to kind of pick a side and hold fast. Friday was one of those days where you had to be more fluid, scalpy-ish in the approach. This run up on the close here just really did not make sense to me, but it doesn't have to. We made new all-time highs on Friday on the close. We ended up closing just a couple of ticks or a tick below that. Friday's close in the pit session was 38.23 even, with the high at 38.23 and a quarter. Quite a bullish close. And then you would expect, with a neutral extreme up, you would expect the market to drift higher on the reopen on Sunday, but instead it has sold off. Friday had pretty good volume, 1.39 million contracts traded. It's quite meaningful and it finished strong. So I'm not sure who's left holding the bag here in the upper end with all this volume in the value area and above. Everything above, most of the volume was above 3,800. Here's 3,800, the century figure. A lot of the volume was in this box right here, and that volume is likely to contribute to further pushes down as we reopen, as the market reopens, and as we come in. So very confusing day, in my opinion, on Friday. We're pushing all-time highs, so it's not a shock that this is what we're getting. Here's what's happened since then. On the after pit reopen, we did get the push higher. We did end up getting a push higher to continue the neutral extreme up stance. You could see the delta kind of turned with price and continued higher. As I said, I expected this to continue to drift up. It drifted up for the last half hour of the day. for the last half hour of the day, the last bracket. And since the open, which it opened right here, it has basically sold off and bounced until recently, where it's sold off a little bit more, extending the overnight low down. So what we have is the overnight session is inside of Friday's range. Friday's range is quite a bit of it is inside of Thursday's range. Thursday's low is down here, but much of the trading on Friday occurred right up in this 37.85 range. And so what we have is a market really in general that is imbalance. So that's what we've got. With the Senate now in Democratic hands, with inauguration just a week, a little over a week and 2 days away, the market really has been anticipating, and this rally from last week is anticipating the $2,000 check stimulus, further stimulus of the economy. This is what's going on here. So I think the market is likely to be very, very sensitive to what fiscal policy will look like coming out of the legislative branch, out of Congress, since Democrats control both the legislative and executive branch. So things are likely to get done without too much conflict, and so the market is likely to perceive that as bullish, and I think it did. So I think we should be sensitive coming into this week. I think we should be sensitive about comments from President Joseph Biden and anybody else in his administration talking about stimulus. I think the market's likely to respond to that. So we'll see how that goes. It's a market that is really addicted to fiscal and monetary policy, and that's what's driving things. And so we need to pay attention. We need to pay attention to any news flow in that direction. The overnight session had delta, negative delta throughout. There's really more selling aggression than buying aggression, and I'm expecting that to continue. Okay, let's look at what we accomplished last week overall by switching over to the RTH composite chart. This each box represents a week. The different colors, the dark gray versus light gray, represents a month. So you can see that December started right here, where it started to turn black, and December ended right here. And this is January, a full week of trading in January. Look at this week's profile. High level, a high level of price discovery. The auction last week was very active in that we got so many areas of price discovery or volume, and we did put in a new high versus the prior week, but we also took out the low of the prior week in the first week of the year, and we finished at the high. So there's some overhead right now. There's a fair amount of overhead, and there's likely an attraction or a magnet to start doing the price discovery back into what has been really what's being established as bounds. So as I push this MC out on the gap, we start to form this new profile, which has a point of control down at 36.94 right down here. So if we take everything that happened in December plus last week, the balance is 36.94. That becomes the big target on the downside if we start to sell off. If we start to sell off, yes, I know we have this end of year, the 4 days at the end of December, but really the meat of it, the real auction, is down here, is down in the 36.94. So it could run through. If we sell off, we could run through 100 points or so, the entire 3,700 handle, pretty quickly, because there's not too much in the way here. And as you can see, there's not balance from last week, so it's likely to run to the next high volume node to the next high volume area and back into balance here before it rests. So again, the short side has quite a bit of distance here if it should continue. Looking at the delta, and again, take this with a heavy grain of salt. Looking at the delta, as the market pushed up last week on a day to day basis, look at that delta. It is really aggressive selling that is putting up numbers rather than aggressive buying while price is pushing higher. Delta divergences are tricky. People swear by them. I don't. But they do feed me some information, and that is, as price went up, we don't have a strong lifting with this price moving higher on a net basis. So if I look at even the tails of these delta bars, the tails are hardly existent. In either case, we are pushing down in terms of aggression as price pushes up. It looks to me, and I've said this before, I know, it looks to me like this thing is really running out of steam. And so that's where we stand here. Okay, so let's shift gears and look at what's expected for today. All right. All right, so as the market continues to push lower, I'm not going to scroll the screen down here. My expectation today is it has likely stalled out, at least for today. I'm looking for it to start pushing lower. We're starting to squeeze against the statistical edges. The statistical edges here, we're well below the 1 vol sigma down. And we're squeezing this low. Remember, the low in the overnight session just a minute ago, right before this trader bite started, was around 37.83. It is currently at 37.78. There's a trend forming. We're breaking out of balance, so this is balance right here, and we're breaking away from balance. We're starting to push lower. The expectation, this has kind of moved away from where I had anticipated, which makes it a little bit easier to play. It's a little more tricky to play out now. The delta is playing along with price here, so the sellers have it. Inventory is 100% short. On the open, I expect us to attempt to make a continuation lower. There's a big area right here at the 37.74.75. I expect us to respond given the inventory. I expect us to respond to the upside. I'm looking for the 37.90.91 area test, consolidate, and then to start to squeeze lower. This will break the one-time framing up from last week, which is likely to invite more selling back into this 37.60, 37.57 area before the bounce. This is the primary scenario for today. I'm looking for a response at some point, which is likely to fail in the 37.90, potentially the 37.96 area. This is a good day, in my opinion, to scale into a position, not to average down, but to scale in. In other words, if we're trading, let's assume we're trading the micro ES, if you're trading a 2-lot, this is the kind of day where you'd want to put a 1-lot out, let the market move adversely, put the 2nd lot out, and then manage your risk based on a 2-lot stop, a standard stop like you would normally trade. The reason being, I expect the market to be sloshy this morning and to push through and squeeze a little bit, given that it's a little bit out of whack versus where we finished on Friday. Remember, Thursday's balance is down here, Friday's balance is up here, and we are below that. I expect some sort of a response and a continuation once we test up, once we clear out the inventory on the short side. We're looking for it to continue. Secondary, we open in a push That brings us into Wednesday's, the upper end of Wednesday's range. Consolidate, chop in here, and then move back into Friday's range. Consolidate, and then start to squeeze back in and towards balance in the 3,800 area. So I'm looking for the 3,800 to put a cap on things, to put a lid on it before it just balances out and finishes somewhere up here. We're opening in range. We're opening in range of Friday, but we are below where we were in terms of balance, or what we accepted on Friday. We're below the 3,800. So there's a lot here that can make the week longs nervous, and so I expect it to balance out to the short side. Be cautious. It's a Monday after non-farm payroll. We may not see any range at all. I mean, I'm drawing on the screen, 30-point ranges and so on, but we may not see very much. But I'm more partial to the short side, but I need the market to tell me that this is the case before I decide to hop in and participate. Okay, good luck today. And again, risk comes first. You let go of your risk and you're just moving from being a trader to being a gambler. Make sure that you're getting a good reward for every risk that you take. If you're going to pay $1 in risk, you need to get $1.50, $2 or better in terms of reward, so you can have an overall expectancy even if your win rate's low. Okay, that's the name of the game here. Good luck, and I'll catch you tomorrow morning. Take care.